Under a new deal, banks will commit $26 billion to help underwater homeowners and compensate those who lost their homes due to improper foreclosure practices. Banks also agreed to change the way they handle and approve foreclosures. A lot of people say this does not go nearly far enough to make things right and amounts to nothing more than another form of bank bailout. Joe Krier, president of Krier Wealth Management, here to discuss why this may be a step in the right direction, but is a far cry from the housing mix. And from what I've read, one of the reasons it's a far cry from being the housing fix is the fact that it may actually lead to more foreclosures.
That's one possibility, but I kind of have a little bit of a different twist on it. I think that this brings clarity to the banks. You know, they think about a business that's getting sued by somebody. That's a big unknown. Now think about a business getting sued by the federal government. Well, you're really the small dog in that fight. Well, now they're starting to get some clarity, and rather than thinking 200, 300 billion, they're talking 25 billion. And in my opinion, that helps the banks plan for the future and maybe even loosen up the lending straps a little bit.
All right, let's get down to brass tacks here. Let's talk about the deal itself, what it means for the people who stand to gain some benefit, and what that benefit's going to be.
Okay, you know, essentially 25 to 26 billion dollars is the original amount that they're throwing out there, and it's essentially $2 billion for checks that are just going to be mailed to people that were sort of abused under robo-signing and some of the other practices used. $3 billion for helping in refinancing, which is getting people to a 5.25% rate, and $3 billion in penalties to state and federal government. And then the big chunk here is to just lop off about $20,000 off of about 1 million mortgages, just to bring those balances down and get those people maybe from underneath their homes.
All right, let's talk about the domino effect of what's been going on in the housing market, because it seems to be a never-ending cycle. Can this change lending practices? Can this ultimately benefit the homeowners?
I think it can, you know, and just the whole credit market and housing collapse in and of itself will change lending. Obviously, banks were pushing money out the door in 2006 through 2008. Now, of course, they're very stringent on lending any money. So, you know, we've swung from too easy a money to now it's too tight a money. And what this settlement's trying to do is bring banks back to the middle, where things kind of go back to where they were in the 70s and 80s, where, you know, a person with a reasonable income could get a reasonable loan against a reasonably priced house.
When do we get there? And will it be soon enough?
Tough question. You know, this recession has lasted 4 years. The average recession usually lasts 11 months. You know, mathematically and technically, we've been out of this recession for some time, but, you know, ask anybody who's unemployed how they feel about it. And, you know, we all know this has been a very slow recovery. And what the feds are doing is they're just trying to put pieces in place, get the wheels turning here. And when that starts happening, yeah, things can progress fairly rapidly.
Let me ask you a pretty loaded question. If this were not an election year, would we see this?
You know, I thought...
You weren't expecting that.
Well, I actually thought about that this morning, you know, and in the end, all politicians really do want the economy to go forward, whether it's an election year or not. And from the standpoint of moving the ball a little bit forward, I think that accomplishes a little bit of a goal here. There's still 90% of the homeowners that are underwater that are unaffected by this. And you have to say, okay, what are they going to get? And what about the people that are still paying their mortgages, you know, that are also underwater? There's just a lot of pieces here. If there's follow-up steps, and if it's easy enough to process this and actually get your money, then I can say, you know, this really does have solid intentions behind it.
So the answer is more to come? Wait and see.
Yes.
Joe Krier, thanks very much.